Welcome back, everybody. Today I'm going to teach you how to record the sale of an asset in QuickBooks. When you sell business equipment or other assets, it's crucial to record both the income and the removal of that asset from your books to keep your financial records accurate. First, let's record the actual sale transaction. At the top of your QuickBooks dashboard, click the plus sign, which is your new button for creating transactions. From here, you'll need to decide how to record the sale. If you received payment immediately, select Sales Receipt. If the customer will pay you later, choose Invoice instead. Next, enter or select the customer's name in the customer field at the top of the form. Now comes the important part. In the Account or Product Service section, you'll select the asset you sold from the list. This might be something like used espresso machine or whatever asset you're selling. Enter the sale amount in the Amount or Rate field. For example, if you sold it for $5,000, enter that here. Make sure to set the correct sales date in the Date field, then take a moment to verify all your details, the asset name, the amount, and the date before you proceed. Once everything looks good, click Save and Close to record the sale. Here's where it gets a bit more technical, but stay with me. To properly account for the asset's removal from your books, you need to create a journal entry. Go back to the plus menu and select Journal Entry. Set the date to match your sale date to keep everything consistent. In line 1, debit the accumulated depreciation account by the total depreciation amount. If your machine has depreciated by $1,800 over time, enter that here. This removes all the accumulated depreciation from your records. In line 2, credit the asset account itself by the original cost of the asset. If you bought that espresso machine for $7,000, that's what you'll enter. This removes the asset's book value from your balance sheet. Line 3 is where you record the money coming in. Debit your bank or cash account by the sale amount you received, which in our example is $5,000. If the customer is paying later, debit accounts receivable instead. Finally, line 4 requires some quick math. Take the original cost, subtract the accumulated depreciation to get your net book value. Then compare that to your sale price. If there's a difference, you'll record it as either a gain or a loss on disposal of assets. A gain gets credited, a loss gets debited. Before finishing up, add a memo describing the transaction, something like sale of used espresso machine. This helps anyone reviewing your books understand what happened. Then click Save and Close, and you're done. Your asset sale is now properly recorded with all the accounting details handled correctly. If you found this video helpful, please leave a like, subscribe, and see you in the next video.